All right, well, let's jump in. So I am really excited to have this conversation. We have two amazing guests. So maybe what I'll do is just let you guys first introduce yourselves, and then we can jump in. And again, today's topic is on Celestia. It's an ecosystem that's I think has grown substantially and really is the core component of the modular thesis. And so I want to spend a lot of time on this conversation talking about modular. I remember a year ago that was the sort of key narrative in crypto, or one of them. And I think since then, as crypto narratives always do, the tide has shifted. But that doesn't mean that there's still not fundamental value and fundamental companies being built on, in this ecosystem. And so what I want to do is make sure we uplift a lot of the core companies being built, or I guess building in Celestia, but maybe more specifically, building a modularly. And I want to also spend time on the core thesis. Like, what are the types of builders and the types of products that should consider modular versus just saying I'm going to go build on Hyper EVM or Monad or Mega ETH or something like that. So I really want to focus a lot on the thesis and then the ecosystem itself. But let's start with a quick round of introductions. Vlad, let's start with Vlad and then jump to Nick.
Sure. Yeah, I'm Vlad, working at Moonrock Capital. I'm an investment partner there. I guess most of the people know Simon from Moonrock. He's like the louder part of all of us on CT. And yeah, like you said, has been the big ETH bull as well. Regarding, I joined, maybe a little bit background towards myself. I joined in crypto myself as a retailer more or less in 2017, bought some Dogecoin in 2013 as well. But I got really into crypto, I guess, with DeFi. That was one thing which actually clicked with me, which made me go full time on it, and just like for me, decided to went down this career path. And at some point, I guess, I started at Moonrock Capital, and there was a freelancer in the beginning, and now I'm an investment partner over here. And I mean, regarding to Celestia, I mean, we maybe just a caveat, we are investors. We haven't been venture investors in Celestia, but I guess we are one of the few on the timeline who were kind of loud on it, since we were buying it on the secondary markets quite aggressively this year. And yeah, therefore, I guess an investor.
Cool. Yeah, Vlad, I feel like you and Simon just have been warriors on the timeline, helping to defend Celestia and also explain why Celestia makes sense and will be a really important piece of infrastructure in the future. So super grateful to you guys. I'm Nick White. I'm the vice president of Celestia Labs, and I've been working on Celestia for the past over 4 years. And we were doing data availability and modularity before it was cool. And then all of a sudden, everyone, the narrative sort of took off. And as Carl says, the narratives always kind of cycle around. And I think in some ways, the modular narrative has quieted down for good reason, which is that it's a whole re-architecture of how to build blockchain applications. And it's actually technically pretty difficult. So in my opinion, it's just taken longer. You always have there's a Gartner hype cycle of the core innovation happens, and that's two things: data availability sampling and rollups. And then you have everyone gets super excited about the potential of those things, and then it takes a little bit longer to actually, realize that potential. And then in the meantime, the expectations get kind of people kind of lose their attention span and get kind of disappointed. But meanwhile, the technical progress is always essentially the chugging along under the surface. And now I feel like we're actually at a point where the expectations and the bearishness on it is below what we're actually seeing in the fundamentals.
Yeah.
And so that's why I feel like it's a very interesting time. And we're just building anyway. Nothing has changed in terms of the thesis and actually how valid this whole, architectural paradigm is of modular blockchains. It's just, narratives and psychology.
Yeah, and let's start with modular. Perhaps Nick, let's have you kick it off. But what I want to start with is sort of why modular blockchains should exist. Like, why do we need modular blockchains compared to just I'm building everything, including data availability, execution, consensus on a single L1? Like, why is a modular approach superior? And then what are some of the challenges for developers if you're building modular versus if you're just plugging into an existing L1? This is really an opportunity to outline the case for modular.
Yeah, absolutely. So I think one analogy that I want to like tap into a little bit later is you can think of the modular blockchain architecture as almost exactly parallel to cloud computing architecture for like traditional web apps and Web 2. So in modularity, essentially before modularity, Bitcoin, Ethereum, Solana, every L1 is this fully bundled stack of like, there's a consensus and data availability, which is like the core primitive that every blockchain needs to do to be an L1. And then, but bundled with that is execution. Like, hey, we have this sort of like runtime environment for you to deploy your own application, like the Ethereum virtual machine or the Solana C-level VM. And that's great because it makes it way easier than me deploying my own application as its own standalone blockchain. If I had to bootstrap a whole new consensus network, you run into all these issues. But the problem on the flip side, when you deploy on a shared monolithic chain as a developer, is that chain has made a bunch of choices for you that you have no control over. So things like what that runtime like VM environment is defines the kinds of applications you can build. Like certain things cost way too much in gas, or certain things just aren't possible. The way that the cryptography of the chain works can constrain the user experience of like, can this actually, can a user store their key on their secure like enclave on their phone? Sequencing rules, like all of a sudden, now you're just, all your transactions are out in the milieu with everything else, and you have to compete with gas fees and everything. Yep. And you also can't capture the MEV. That all will end up going down to the base L1 validator. So all these choices get made for you. And the beautiful thing is, in a modular world, when you separate the execution aspect from the L1, now the developer has control over that and can define all of those things. And it's very similar to cloud computing, where you can deploy a virtual server. So like equivalent in like web apps is people started deploying their websites as on these shared web hosting sites like GeoCities. And it's very similar. It's like they had a server on which you could deploy your website, but they defined all the sort of like configurations of that server. Then why was cloud such a revolution is because it applied it created this idea of the virtual server where you can configure everything yourself as the developer of your application. And it becomes very scalable because it's this dedicated instance. Yep. And the same thing is happening with modular blockchains. Instead of deploying a smart contract, you deploy your own virtual chain. All the configuration, all the scalability is there out of the box. And so that and then analogy again, Celestia is the AWS, the cloud infrastructure provider, not the data center, but in this case, in the blockchain context, a data network. And so that's really what Celestia and modular blockchains are about. It's like the next evolution of how developers and enterprises and companies are going to build blockchain-based applications.
Yeah, no, that makes sense. And like the canonical example is if you're trying to do a DeFi transaction and there's an NFT mint going on simultaneously on an EVM, you're not going to be able to get your transaction through, or the gas is going to be 10 to 100x more, and you have no control over that execution and pricing environment. And so if it was a modular network, you'd be able to customize its designs. That way you don't have sort of deteriorated performance under certain conditions. It's like the canonical example that as soon as anyone who's been in crypto understands that, it's like, oh, I see the value here immediately of why that's beneficial. So I guess, Vlad, what would you want to add to that? And in particular, as you're looking at companies from an investment lens, what have you seen companies looking to build modular, and what are the types of companies that you feel lend themselves well to a modular stack versus a monolithic stack?
Sure. I guess to maybe just state it again, I feel like for us, the one thing which always made sense the most is we were starting based on, okay, we think rollups are the new design path for many of the new chains. We don't think that applications developers want to mess around with building consensus on their own. And then we basically come to the point that we especially see for actually a Solana thesis in terms of improving latency, that especially for finance applications, something like a modular stack makes a ton of sense. In the end, we are doing what we're exploring, I guess, the design space of what we can do with blockchains and what we can do with verifiable compute. What always got us pretty interested was, let's say, the rise of mega ETH types of build outs, since there it just makes extremely high sense to us in terms of, okay, you will never beat this kind of latency compared to a sequencer. And obviously there are other trade-offs. Sequencer can rotate around the globe though. But we just feel like, okay, finance is very dependent on latency and especially trading. So it just made us click at some point that, you will not beat a sequencer in terms of latency, and therefore finance applications and especially trading should live on there.
Yeah, it seems like, so let's talk about the ideal customer. And one of the things that I found a little bit surprising is Robinhood choosing Arbitrum. And perhaps it wasn't surprising in the sense that there was likely a very large payout, I'm assuming, to win a customer like Robinhood that Arbitrum did. But it seems to me that if you believe in modular, then believing in app chains or sort of like concentrated chains for company chains might be another term.
Yeah.
Seems like they'd be perfect customers for modular because they might want to customize some of these different elements. So when you look at target customers, target developers, I see the advantage sometimes in building in an existing ecosystem. And I also see the advantage for certain segments in being able to control your execution environment. So, Nick, what, teams that say, hey, I want to build on Celestia, what execution environment do they typically use? Like, is there a number of these off the shelf that they can take to pair with the DA and the consensus that you provide? So that's the first question. And then what are some of these, what's like the perfect customer that you view modular serving?
Yeah, you made a really good point which I want to address up front, like the second half of your question. So how do you think about the ideal customer or user of a modular blockchain stack like Celestia and all these rollup frameworks versus someone who should build on a shared execution L1 like Solana? Is a really interesting question, and the way that I think about it is, if you want to move more quickly and you want to tap into an existing sort of like wallet and user base and sort of like suite of other applications very simply, then it's probably better for you to build your application as a smart contract on something like Solana, because the trade-offs there, like the benefits outweigh the costs, right? And if you're doing something very simple, it's like you probably don't need that much customizability. You don't really need that much scaling off the bat because it's just a new thing, and it's more important for you to get users and test out your idea. So
test the hypothesis, see if it's working. It's kind of the classic ETH development paradigm: build it, and then if it starts to work, hey, I'm going to go launch my own L2 or my own thing. Yeah.
So exactly. So then, who's the customer for rollups and the modular stack and Celestia? It's the teams that maybe they've already built their smart contract on a shared L1 like Ethereum or Solana, and they're starting to get a lot of traction. They're realizing, hey, if we need to make this product better, we actually can't do it here. And if we need to have better scalability and reliable fees for our customers, we can't do it here. If we want to capture more of our economics and upside, we can't do it here. We need to launch our own chain. But at the same time, we don't want to have to build an entire L1 from scratch. Like that doesn't matter. Like that is just technical debt. Like, why should I care about consensus? I'm building a product, an app, and I want to focus on that. And that's exactly the sweet spot for modular, where it all works out of the box, and you don't have to launch a proof of stake network and rally a bunch of validators. You don't have to then continue to maintain that network of validators over time, but you get all the benefits of all the customization that I was talking about, of like custom VM, custom sequencing, custom economics, custom cryptography, whatever you need to do to make your thing more successful is now available to you. So and greater scalability as well. Like, you have a full dedicated execution layer that's not going to clog up when someone else is doing an NFT mint, right? So that's a kind of like the core customer. So we think of Celestia's users as like power users, like power developers. The most ambitious and successful applications are going to end up building on the modular stack. It's to me, it's kind of inevitable because of those advantages. And enterprises actually are an example of a type of customer that just skips the whole process because they don't need to deploy as a smart contract and test it out. They probably already have a bunch of users. They already have a good idea what the product is, and they can just go straight to doing modular. And that's why I think we're seeing that with a lot of the enterprises that are entering the space, whether that's Coinbase or Kraken or now Robinhood, all deploying their own chains. They're all L2s, and I think that's not a coincidence. And you could say, oh, well, Arbitrum paid them a bunch of money, but the thing is, I guarantee you, literally every ecosystem was trying to pay them money to deploy on them as well. And so it still does come down to a product thing. I'm sure that Solana would have loved to win that. I'm sure maybe Avalanche or whoever with throwing a bunch of money around, right? But from my experience, what I've seen is these customers naturally gravitate to rollups because they get it. They're like, yeah, actually, this suits our needs. We don't want to have an L1. We don't want to have to. That's also sticky from a regulatory standpoint. Like, I think when Facebook was trying to do Libra and like do their own L1, I think that spooked a lot of people. And in general, like it is a little bit scarier as a business operating a fully decentralized network, and there's a lot more liability versus like, hey, this is our L2. We control it. We have we can prescribe it. It's not like they don't want full permissionlessness, right? They don't want to have an L1 where literally anyone can do whatever they want. They kind of want that control and that centralization. Like that's actually a feature and not a bug for these enterprises. It's like enterprise blockchains were so hot in like 2017, 18, 19 or whatever, and they didn't work because obviously they're like private. So like, what the fuck's the point of a blockchain if it's all just like, it's just another server, but like shitty, another database. But now we have this perfect medium where it's like enterprise kind of centralized in the right ways and still public and verifiable and all these other properties that you want from a blockchain.
Yeah, it's certainly the future of ecosystems where instead of I need to build out a bunch of APIs for anybody, because if you're an enterprise and you want to build an ecosystem, you have to create a set of robust APIs and then get developers to use those for their own use cases. But then again, there might be information leakage. You might have IP that leaks out. You can very easily in this environment say, hey, like I'm just going to, instead of creating every API endpoint, I'm just create a generalized L2 or a modular network. And then anyone that wants to build using a set of IP, using a set of brand assets, using a set of currencies can do so in essentially this container. And it's lower overhead for the corporation. And because it's better monetization, because they're monetizing every single transaction that takes place, you'll probably make a lot more money. So I think the future of ecosystem development for corporations, it almost has to be on chain. And I think there's a massive opportunity there. And I'm glad that beyond Coinbase now, we're seeing more and more large companies, ideally moving beyond crypto into general, Web2 companies, moving into the modular L2 blockchains that they own to facilitate the ecosystem.
And I think to just add on that point, one thing is you massively decrease the time to mainnet with the modular stack. So you're way faster compared to, let's say, Coinbase would have built an L1. It would have taken them way longer to build it, and it cost way more. And in the end, it's for them also from a business perspective. Now they have the ability to basically own 100% of them, while in an L1 scenario, they probably wouldn't. So like you mentioned, I think it's a way better path for them to monetize. And in the end, like general purpose L1s, more or less for me owning the state or owning the assets. And if you're owning the distribution, why should you give that up? So
Totally agree.
I think in the end, it's like it's just way faster to market. It's way cheaper, and it gives you way more control. And if you own a distribution, why should you give up the potential mode and basically own having like the network with the assets on it?
Totally agree. And so when we think about the difference between a L2, like if you're building on Optimism or Arbitrum, like an L2, Orbit or an L3, what is the difference between that and a modular network? Like, what's the right way to are they one and the same, or where's the key differences? And I realize sometimes in crypto we get into semantics, like how
Mhm.
decentralized something actually is or not. But is there a simple framework for a modular network versus an L2 and the differences between them?
Yeah, I mean, I think so. The word modular kind of applies to anyone building in this paradigm, whether you're building a modular L1 like Celestia, or if you're building uh, an L2, which is like a more like I always use the term roll up because that's the way that I think about it. But
Yep,
like, there's all this fucking bullshit terminology about like
I
you
know.
just call it an L2, not a roll up because it doesn't use whatever. But the point is, it's the same construction. It just starts like people just make up things. Ultimately, no one is going to give a shit about L1 or L2 or roll up and all this stuff. It's all just nerd speak. All that
Yeah.
really matters is you have an application and you have a security zone. And so the L1s, I think it's better thought of as like these security zones where they provide you with this raw resource of running decentralized secure applications on their block space. And then you have the people who are deploying applications. And the application can be a smart contract, or it can be its own chain, its own virtual blockchain. That's what a rollup is. And so ultimately, it doesn't really matter. And like even the notion of L2s, like they do inherit some properties from the settlement layer, like Ethereum, like if it's more censorship resistant and you can exit your funds and things like that. So
Yeah,
that there's some significance there, and that I think we need to take more of like a user centric view of these things of like,
yeah,
what are the guarantees that this chain specifically is providing you? Because I don't know, even it's funny because like I'll give you an example on L2B. They'll classify something as a Validium or a Optimium or a roll up and all these stages and whatnot, but it's all the problem is a little bit misleading because it's all from an Ethereum centric view, which I have no problem with that, except for the fact that what matters, what L2Beat is really trying to do is inform the users. And the what matters is not, hey, how secure is this for the Ethereum bridge? When there's a lot of these rollups, there's almost no money that is even funded through that bridge. So the
yeah.
classification almost is like almost irrelevant. And yet that's what users see if they go to L2Beat and they're trying to like grok like what is the security of this thing, when actually like the asset that they're holding, which was bridged in via some other bridge, has a completely different like security paradigm behind it. So
Yep.
anyway, I'm probably
And,
getting a
and if
little
it's
bit
centralized asset, it doesn't matter. Like people are
Yeah.
like I don't know, that people were like the value of the network is only secure. There's this classic argument of the network is only as secure as the total value of the proof of stake. So that some of the assets on top of the network need to be less than that of the value staked in the network. And it's such a silly argument because it kind of means that at the application layer lives to serve the protocol, which nobody would say, oh, all these companies exist to serve Amazon Cloud and Azure Cloud. Like that'd be the silly thing. But yet for some reason people in crypto thought that. And secondly, is a lot of these assets are centralized. And so like USDC, if there's some shenanigans going on, they can say, okay, great, we're gonna like pause here and like we're going to give people one-to-one value, and they can just immediately move assets. So the security of the network is, it doesn't really matter when you're talking about a centralized asset
Yeah.
issue or a creator versus assets that are truly decentralized and immutable. So I totally agree with you.
And I think, Nick, you're actually speaking a lot regarding this in terms of basically escaping the chain-centric view. And I think this is something what we at Moonrock also, I don't know, I'd say double and tripling down on right now is at the end, all what we are looking at is a couple, or from an outsider's perspective, it's a couple of chains and somehow you go from this chain to another chain. And we actually end up with now, every new app has a privy authenticator, and it's basically just a relay or transaction to get me in there or not. So I'm very far away by now that the chain actually owns the user. It's way more Phantom owns the user. And I mean, we obviously have been investors in Infinex, for example. Out of this thesis, it just seems like time that we are now bundling all of it together. And then I'd say a minimized infrastructure like Celestia makes a ton of sense for applications, because you don't have like this weird, extreme complex system compared to others where it's like, okay, you can bridge down there and go there. It's just like, I want to provide the service for verification, and that's it.
Yeah.
Absolutely.
And so what are the things that, I remember, especially last cycle, people said a lot is the institutions are coming. The institutions are coming, and
Oh, no.
I think it makes me think of, the British are coming, but like, I think this cycle, the institutions have started to come, but it's maybe not the institutions we thought. It's actually the TradFi players are really, last cycle, one of the things we saw is Web2 companies like the Netflixes and the others were all talking about blockchains. And so it was consumer, it was entertainment, it was media. All of these companies were talking about blockchain. And this cycle, like, it's still silent. Like, we still see very few, if any, sports, media, entertainment, any of these things that we engage with regularly as users, any of these apps on our phones actually moving on chain. It's still mostly the traditional institutions and maybe using stablecoins for settlement. I'm assuming, Nick, you're having a lot of really interesting conversations with some of these media companies, these entertainment companies, these sports companies, without obviously revealing information. What are you seeing on the institutional side? And is there demand from this broader category of institutions this cycle on launching their own modular networks? And if so, what does that look like?
Yeah, good question. I mean, I remember, I don't know if this counts, but I remember last year, like Amazon doing NFT stuff on Polygon, or I don't know, there was a lot of
Instagram started doing stuff on Polygon and Solana. They had NFTs for about a week. I remember everyone in Solana, I think we were at Breakpoint, and Instagram announced it, and everyone's like, we moon, and then I think a week later they shut it down. But yeah, there's all these companies talking about it.
Yeah, even I remember, I don't know if this is still a thing, but on Twitter you could put your NFT and like verify. I don't know, is that even, I feel like they probably killed that feature. But yeah, I almost forgot about all those things. Well, what I'm seeing from my vantage point is not so much those kind of like media-based companies being interested in blockchain stuff. It's very much more the financial sort of realm. I think that the TradFi, I bet there was a lot of people in TradFi who understood, oh wow, blockchain is like just a complete upgrade and overhaul of the back end of finance, and but they were kind of, hands were tied in terms of their ability to engage with it and actually like use the technology because of political reasons. Mm-hmm. And then also, frankly, I maybe controversially, I think that the Genius Act, which I has it fully passed? I'm not sure. I'm sure it will.
No, I think it's supposed to this week, but I don't think we're there yet.
Yeah, well, the interesting thing about the Genius Act is like, well, if you study history and like how industries evolve, a lot of the times, like incumbents try to use regulation as a way to sort of like give themselves an advantage. And I do feel like the Genius Act, to some degree, falls into that, where it's like, oh yeah, we're legalizing stablecoins in the U.S., but you have to basically be a bank and have all these things, and so like it entrenches into some degree. Like
and you can't give out any interest.
Yield.
Exactly. You can't pay out any yield. I'm like, wait a second. And that was a concession to the banks. And you're like, wait, so now we have stable coins, but now the banks are literally going to be getting straight 3 to 5% interest, while consumers, they literally legally can't pay it out. Yeah, it's pretty wild.
Yeah, it is pretty weird. So anyway, I feel like the traditional finance sort of like cabal, or just any of these enterprises or businesses are looking at this with they're like, wow, this is juicy, we want a piece, and there's very much a rush to be part of it. And I think that where it does get more interesting is like things like what Robinhood's doing with tokenizing real world assets and putting those on chain and expanding, like starting to bring more of TradFi on chain. I think is going to be a really massive unlock. And I think people are underestimating like how much that will change the nature of not only crypto, but also just like the world, and and how big this thing can be, and we're not, and like, it's so far, it's only just the little announcements of like, hey, this is what we're thinking of doing. and like none of it has actually been shipped yet. And like I think it's going to take a long time, but like it's so bullish. That's why I do feel kind of like we're in this super cycle. Is like the starting gun has already been fired, and all these, you have this race behind the scenes of all these people trying to win the on-chain, the coming on-chain like financial world. And like, that's not going to stop. Like, it's just going to continue. And these people have a lot of resources. Like it's going to get wild.
Yeah. One of the things that, one of the challenges about building a modular, to your point, is you're not plugging into an existing ecosystem where you have wallets, you have RPCs, you have block explorers, you have liquidity. You at least some of those might be ready out of the box, but others aren't. And so, I imagine the biggest challenges in trying to build modular would be liquidity. It would be block explorers and wallets and RPCs. Like, I imagine those being some of the biggest challenges. What has Celestia done to kind of reduce those barriers, to make it really easy for teams that do want to build modular, such that they can get started and get their ecosystem up and running quickly?
Totally. So you're so right, and I've seen people tweet, and maybe you've seen some of these tweets of like, hey, we were going to do an L2 or doing our own chain, and then we talked to Etherscan, they're charging us $1 million. We talked to Chainlink, and they want $1 million. Like, oh, we want to integrate with MetaMask, and like, well, luckily I think that's now pretty much permissionless, but like maybe in the past, like integrating a wallet, Phantom, like, oh, well, you have to pay them a ton of money. So like, we were in a paradigm where those were the gating things, but increasingly, like, there's open source, very cheap, out of the box things that are all extremely easy to connect to each other and that don't cost very much. And so like the whole infrastructure stack is emerging around the modular thesis in a way that's going to be, I think, kind of make that problem kind of irrelevant. But it still is more work. Like, I'm not going to lie. Like, if you deploy your smart contract, it's like you don't have to think about any of that, right? So there are a lot more pieces to think about and consider, and it does cost money to operate and host an RPC endpoint, or to, run the block explorer and the infrastructure, or even run the node, or so the roll up sequencer, right? All these things do cost money, so it is more expensive. But in terms of the cost compared to the cost of running an L1 is like, running an L1 is like 1,000 times more expensive. So it's a huge delta, and yet you get all the benefits of that too. So
exactly.
And for the right people, it totally makes sense. And I want to give a shout out also to like this whole category of companies called roll up as a service providers, who they do the hard work of being system integrators, essentially, where it's like they take all these different components and all the surrounding infrastructure, like wallets and explorers and all that stuff you mentioned, and package it into one thing. So it's like can be a white glove, like kind of one-click experience for people. It's very similar to like, again, the cloud computing paradigm, where it's like I can go to AWS console and just deploy, an instance in a few clicks, and like I'm sure there's a shitload of stuff happening in the back end that I don't even have to think about because it's all been abstracted away. So we're kind of, I think, still in the process of getting to that ideal future, but there's nothing fundamentally standing in the way from that.
Totally agree.
And sorry.
Go ahead.
Yeah, just I have to be honest, I haven't been checking with them on prices on the Rust providers for some while, but I talked to them probably like 1.5 years ago for prices, and it was just orders of magnitude lower than hiring engineers to build a new L1. So it's definitely, it's not even comparable. You could maybe get one.
And those companies have done well. I mean, I remember looking at some of those on the private deal side, and I was like, yeah, that's pretty good. That's outside of our sweet spot as a fund. I mean, they're raising big valuations. They're serving big customers. I think that whole, we're going to make, blockchain in a box, for lack of a better term, has been growing really well. And to your point, I do view it as a really strong sweet spot for a lot of these, especially larger customers and institutions, to immediately get up and running. And I think they're going to continue to do well.
And the interesting thing too, I just want to mention here is like, if you think about the cloud analogy too, a lot of people do think, okay, well, once a application or a rollup is big enough, they're going to transition to be their own L1. Why not, if you have the resources? And there's an interesting post from Airbnb that basically explains like even no matter how big they've gotten, they're still on AWS, and the reason is it's just like the amount of like the delta of the money that we would save versus the extra overhead of having a whole team and having to stay up to date and replicate all of that sort of like work is just not worth it to us, to them. And it's just like, yeah, we'll pay AWS. They make a margin on it, but like, that's not core to our business anyway. And so I think that's another interesting thing people don't appreciate is like, I think margins for L1s have to compress, and that's in some ways a bearish thing. But like and that's why people have been bearish on Ethereum. That's why people have also been bearish on Celestia. They're like, oh, well, you don't own the user, blah blah blah. And I'm like, well, guess what? I have bad news for all you Solana maxis. Is like Solana is going to have to go through the exact same transition, and we're just speed running it and positioning ourselves better for the inevitable like future where. I think L1s to some degree are back-end infrastructure. It's a B2B service, and your customers are these developers and enterprises and not necessarily the end user. And that's just like, it's inevitable in my opinion. And it's not necessarily bearish either. AWS makes half of Amazon's operating profit. It's about scale. And if you're bullish on Web3 scaling massively from here, which I think we're starting to see the early, innings of with all this finance TradFi going on chain, like the amount of demand for block space and decentralized compute as a resource that, L1 like Celestia provides, the economics are going to add up very quickly.
Yeah, no, I agree. I mean, actually, I think Solana is going through some growing pains. I don't know. People who follow my ex are like, "Oh, you're actually saying some critical things about Solana." Like, kind of fanboy season is over. I think Solana is at a very critical point in its juncture that it hasn't been in since the FTX, days. I mean, that was obviously and will be the darkest time ever in the Solana ecosystem. But certainly, as I look at the next year and the key trends that are key crypto trends, institutional, stablecoins, and consumer, and let's say perpetuals is like a fourth category, so it's so big. I think Solana really is only winning on consumer. I think if you look at stablecoins, sure, there's stablecoins on Solana, but like a lot of the payments deals I see and a lot of the government level activity taking place, it's not on Solana. If you look at institutional, like the RWAs and the BlackRocks, like a lot of them are going Modular, L2s, the Robinhoods, Coinbases, they're not going Solana. And then, consumer is really the only one where Solana has a strong foothold. But, as I look out, Solana is not well positioned for many of the key, trends that will take place over the next year. So it's a really interesting time to be a Solana holder and a Solana, not financial advice, a Solana holder and, as an investor. I don't know, Vlad, I don't know what do you guys feel on Solana right now?
Kind of see it similar, I guess. I mean, we obviously still hold a Solana position, and in the FTX times, we're one of the few who basically were at the breakpoint conferences and doubling down, I guess. Nonetheless, I'd say we run pretty far for basically not winning DeFi in Solana, and we haven't been seeing a lot of stablecoin inflows, and it's just a little bit underwhelming what is happening on the DeFi side, and actually think the teams are great on Solana on the DeFi side. I really like a lot of them, but it just felt like that a lot of the traction on or deep capital markets like Aave are still on Ethereum, and then the massive competitor with Hyperliquid, which is winning perps, which is, on SEX, the most profitable segment for all the SEXs is perps, is also not Drift right now. So, and we see Phantom basically integrating Hyperliquid in their wallet as I'd say a more Solana native wallet, even though there's Sui and EVM as well. But I guess I agree on it. I obviously don't want to say that Solana's bad. I don't ever mean it. People always say when we say something bad, they take it so seriously. It's just like it went pretty far for not winning, I guess, in segments which have high quality of revenue, like DeFi, in my opinion. And obviously, Pump was the incredible winner, and you guys were leading it, of course, and is winning social. But it looks kind of tough here, and I would yeah, I think, like you mentioned, a couple of
Yep.
growing pains.
Yep. So speaking of revenue, Vlad, I have a question for you. Revenue is, I think in the past, call it 3 to 4 months, been the valuation consideration that
Yeah.
investors are looking at. I do think we've kind of over-indexed on revenue, and I actually think like general adoption is still like by far more important than just how much are you buying back and burning. But that said, revenue is a core proof point. I know in Celestia I saw 1 or 2 tweets where I was like, oh, Celestia is valued here and it has such low revenue. But like, what is the right way you think about valuing an asset like like Celestia, or maybe more broadly, sort of these modular ecosystems? You can even throw Optimism or Arbitrum in there, but like, what is the right valuation framework if it's not revenue? Because obviously, as investors, we need to say not financial advice, anything here, but
Yeah.
is this overvalued? Is this undervalued? Should this be in my portfolio? So I'm curious, like, what is the right way you see to think about Celestia and other modular assets?
I guess for this one, I mean, first of all, I agree. I think we over-indexed a bit, especially because people will extrapolate on the short term in terms of something which had not have revenue pumped, and therefore it's not important. It's really good that we finally accepted in crypto that revenue is a thing, and companies or protocols have to earn money to grow. But in general, even Celestia, I don't view it that differently, to be honest, to other ones. In my honest opinion, everyone is kind of moving into the same direction. If we take a Solana, and if you would argue about it, it would kind of look the same. Obviously, you have like priority access to state there and could make the MEV argument. But I mean, you see that there's a big push also on Solana. We have to enable app-specific sequencing. We have to enable applications to capture the MEV. And that the question becomes, I'm not as hard in terms of, I guess Justin Drake mentioned it, that at the end it's just base fees and not MEV. But there is an argument, I'd say, for maybe there's 10 to 20% of the MEV captured by Solana. And I mean, right now it's captured by the validators, to be quite frank. And so therefore, it's kind of the same. Nonetheless, I would say we are very early in the stage, and even something like Celestia here should be a growth play in terms of how big do you think can this market become, and then you should probably discount towards that. And maybe to a little bit add on this is it's very something like Celestia and DA is very viewed in terms of, okay, DA is a commodity and it's basically worth nothing and just bandwidth costs and just the boxes. And I just think not financial advice, I just think at the current stance of dominance in terms of other L1s, it seems, kind of cheap in terms of, okay, everyone thinks it's a commodity. I think, or I saw yesterday actually the old post of Nick where he said like it's good that it's viewed as a commodity, because if Celestia is viewed as a commodity, there's no need for new DA layers basically to build, because nobody has an interest to basically serve a commodity market. And then there are a couple of future paths which could make the, let's say, discounted cash flows or monetary aspects of it more interesting. And I guess the one part is, okay, if Celestia is actually going down the interop route and is being able to fulfill, let's say, I would call it the atom vision with, just working, and be the coordination layer around these rollups, because you can have better interop if everyone is using the same DA layer. There might be a premium what you can charge, especially on these services, obviously. But this is kind of the same discussion as in ones where you argue about, okay, is state basically overlapping or whatever. It's more or less, I guess, the same. And then you also have, like, I think Bain made this paper in terms of, okay, it could also become a proving layer, and it's a kind of similar function to settlement or verify. So from my perspective, it's just like the market views it as a very commoditized space right now. And there are a couple of paths which probably allow it to charge, I guess, a way bigger premium on it, or on a couple of services. Maybe it's not DA then, but it's the interop through Celestia. And therefore, I don't have a formula for, okay, what do I think, how much gigabyte, I don't know, will be posted there, and what will be the price. I think I don't know, everyone in venture always underestimates the growth and or investing. So it just feels like a directional right bet to me, and therefore I believe in Nick's words that there's way more to come in terms
Yeah,
of
for
throughput.
people that are supposed to believe in exponential growth, venture is really bad
Yeah.
about actually forecasting exponential growth. I actually really like, and then I'm gonna let you wrap stuff here, Nick. I like one of the things you said around DA is people think DA is a commodity, but actually I've been hearing separately from chatting with you two that the DA is not, and in fact, like even the eigen DA again, without saying anything negative, what I'm hearing from developers is like eigen DA is still not either enough bandwidth or certainly not a great product. And I do think there is, DA is not a commodity. And so if everyone else thinks it is, that's great for Celestia just to keep building and shipping and growing. So Nick, like why, maybe this is an interesting question. Why is DA not a commodity? And like, what is premium about Celestia DA relative to the market? And then, wrap us into forward looking. How do you continue to make Celestia like a premium DA later and more broadly like modular stack?
Perfect. Yeah. So the DA is absolutely not a commodity, and there's kind of two broad reasons for that. The first is kind of the most straightforward, and maps very well to even what I would say, is like cloud dynamics and the cloud computing business. So DA is not a commodity because the underlying infrastructure, like as a product of like, hey, this is the protocol that provides your DA, is not commoditized. So there's different ways in which those are designed that provide different kinds of developer experiences and features. Things like how fast the finality is, how easy it is to integrate with your rollup framework, and also like the distribution angle, like how many other these auxiliary things that we were just talking about of like explorers and RPCs and wallets and rollup as a service providers that are like sort of part of the distribution and the overall integration package all has to be there. And those integrations are actually kind of expensive to maintain and deploy in the first place. And so you end up having sort of this like consolidation effect, and also makes like switching costs are actually pretty high. It's like, yeah, in theory we could, Airbnb could migrate from AWS to Azure, but like ultimately it's like a pretty heavy lift with a lot of risk. And so it's like all of those, and there's also just brand. It's like, hey, well, what brand do we want to be associated with? Which of these things is tried and true and is battle tested, and we want to build on that because this is like crucial to like the success of our own application, the reliability of what we're building. So I see all those things as like reasons why it's not strictly a commodity. And again, that's the same in the cloud. Like AWS charges way higher margins than almost every other cloud provider, which doesn't make sense because like you think that cloud is a commodity, it really is just compute, but it doesn't play out that way. Then the second part is where it gets really interesting. So it's also not a commodity from the perspective of what I was describing earlier, which is that L1s are security zones. And what I mean by that is they provide this, there's this feature of consensus and data availability that it is necessary for applications to plug into the same consensus and data availability layer to have full secure interoperability with each other. And I do think that the way the blockchain evolves is more and more value on chain. It's not going to be about atomic composability. It's going to be about how secure and trust minimized is the composability that you can provide with other applications. And so ultimately, more and more liquidity and value and applications are going to start to co-locate on this single security zone, right? And that's really what the pie, like the prize is of being an L1 and what every L1 is trying to kind of compete over. So it is about valuable state. It is about, assets and liquidity and GDP and attracting that into your ecosystem, but just not at the execution layer, at the underlying DA and consensus layer. So that's where I feel like it's even stronger network effects than anything you see in cloud. And that's also why Celestia is really doubling down on enhancing interoperability as a primitive and a feature of the protocol with things like lazy bridging, which makes it super easy and turnkey for developers out of the box to plug into all the existing liquidity in the broader ecosystem.
Yeah, I mean, I wish we had more time because I'd love what is the one or two lines on lazy bridging and that implementation? I mean, it just seems such an unlock for developers to be able to immediately plug into liquidity throughout the ecosystem.
Yeah, the idea is essentially really quickly that if you deploy a new chain, like you're talking about, the liquidity trade-off is it's hard. You have to attract people to bridge there. You have to deploy bridges with all these other chains like
Yep.
Ethereum and Solana, all that stuff. It's a huge amount of headache and difficult. And what lazy bridging does is basically makes it so that there's just one hub. Like you can just deploy a bridge to one place, which is the Celestia L1,
Yep.
and from there are bridges onward to everything else.
Mm.
So including Ethereum and Solana and all these other L1s. So like it's just kind of a one-stop shop, and it's already kind of baked in to the underlying node infrastructure that you're using for Celestia anyway. So it's like it makes it just very, very turnkey from a developer experience standpoint. And then for users, having intent frameworks and other things that play nicely with it also will make it super simple from a user experience, which is really what matters.
Yep.
And that's where Modular is falling short right now.
Yeah. Well, this has been a terrific conversation. I wish we had more time. As always, 1 hour is never enough when you're starting to get into the trenches on some of crypto's most important questions. Vlad from Moonrock Capital, Nick from Celestia, thank you so much for the time. This has been great. I look forward to processing this, getting captions, and getting some clips out. Really enjoyed the conversation.
Thanks, man. That was fun.
Thanks,
All right,
Carl.
thanks. See you guys.
Cheers.